Fire is hot, water is wet, and crypto is volatile. So much so, bears and bulls are scared alike at times. Recently, the mantra of buy the dip was sounded abroad, and while bears may have laughed initially, they're not anymore. Yet again, this popular mantra has proven an effective strategy for investing in Bitcoin, at least on short-term timeframes. But that got me thinking, is it really this easy? And if so, what about other commonly believed best strategies, like all of these ones? Is there any research done proving or disproving some of our most popular investment strategies? The answer is yes, and the actual findings may surprise you. I know it did for me, and not in the most pleasant of ways, I'm not gonna lie. Some of you may be triggered. Timestamps to them are all below. So first up, how good is buying the dip actually? To answer that question, I will be using a popular study which analyzed 3 different types of investing in an S&P 500 tracker over the past 40 years. Tiffany will have the worst timing in the world, buying every market peak. Brittany will have the best timing in the world, superhuman, buying every market bottom. And Sarah will be super boring, just continually buying every month, regardless of price. Who would do the best? I bet most would think Brittany, right?
It's Brittany, bitch.
Tiffany's terrible timing turned 96,000 into 663,000. Brittany's superhuman timing turned 96,000 into 956,000. That's a 44% difference. Certainly notable, but perhaps not as big as one might have expected considering the giant skill gap between the two. Sarah, though, each and every month, buying regardless of price action, made 1.3 million. That's 96% better than Tiffany. Okay, fair enough, but it's only 35% better than Brittany, who laser sniped every market bottom. Someone literally not even paying attention to the market, like a game of blindfolded darts, performed better than one of the best swing investors possible. Mind blown. Doesn't require anything flashy. It's plain old boring and simple. So simple, we can think it might not even work that effectively. Timing the markets beats timing the market, meaning the sooner you can get in and the longer you can wait, generally, the better. So is buying the dip a bad strategy? No, but it's not as good as you probably thought. If you were waiting for a dip to buy in, then the research would suggest on average, you'd be better off not waiting. On average. What I will definitely say though, as a positive for buying the dip, is it's usually much better than the opposite alternative, selling the dip. A hugely popular tactic actually among normies. So next up, taking profits. This is one that we're told time and again is never a wrong thing to do, to never feel bad about it. It's always good. But if I'm completely honest, I do think it's a bad idea. There, I said it.
I do. And I'm tired of pretending it's not.
On the one hand, huge amount of market history showing that good assets always rise. And on the other, it's always wise to sell when you're in profit and realize some of those gains. They can't both be simultaneously true, can they? The truth is, unless you're immediately reinvesting it or otherwise needed it for unavoidable expenses, research suggests on average, it's a bad idea on long-term timeframes. But am I a hypocrite? Yes, absolutely. Personally, I just wouldn't feel comfortable without at least some cash in case of a rainy day. Just makes me feel better. But something we can do, which is sort of the best of both worlds, combining the stability of cash outside of inflation with a bit of the gains of crypto, is putting your money to work. Companies like Binance can offer 5% interest on stable coins like USDC, BlockFi up to 8.6, which got boosted to 10% last month. And if you understand the power of compounding interest, you'll see why this is such a big deal. Now, this is usually the part of my speech where people will say, not your keys, not your crypto. Another popular investment mantra. With my personal risk tolerance, I'm okay putting part of my portfolio on places like Binance or BlockFi. Maybe yours is different, but you should probably never put all of your portfolio in any one place anyway. In the extremely unlikely event Binance or BlockFi exit scams, runs away with my money, hey, because it's not all of my crypto, I will just go with it and accept my fate. So, should you take profits? On good assets, no, but Also, yes, maybe. It's complicated, depends how exposed you are, but earning some yield on profits instead of them sitting idle can hopefully make the decision a little bit less complicated for you. But if you don't need the money, the only way selling is ever recommended on strong assets is if you can trade well. So let's discuss that. Next up, day trading. Working from home, being your own boss, and growing your money pile while sat at your computer. Seems great. Probably something every one of us watching right now has considered at one point or another. I hope it's quite well known how hard this is to be successful at. Research can't definitively prove the exact percentage of successful people, but it's estimated to be low. Like really low. Like 95.5% of people struggle to break even. 95? That's bad. There's a few reasons for this, of course, mainly because it's hard, right? On the one hand, trading requires no emotions, nerves of steel to only think logically. And then on the other, it's one of the most emotive jobs in the world. Like, I'm just trying to think of a more emotive job. An anesthetist at a veterinary clinic putting down... I don't know. The reason why is, of course, obvious. If you're up on your trades, you can feel greedy. And if you're down, you can feel scared. And to top it all off, as though that wasn't enough, it's your own money on the line, making it that much harder to remain objective. And then even if you are profitable, taxes and trading fees are going to eat into your profitability. Plus you've got algorithmic bots and whale manipulation, basically set up to fail every which way from Sunday. These are cold hard facts. Not beating around the bush with my words here.
Please, I don't have any time for any gossip now. Eh? Yes. Look at you.
Final verdict. Should you day trade? Honestly, no, probably not, but I don't want to destroy anyone's dreams here. If you're willing to work hard, you can do almost anything, even if the odds are very stacked against you. Don't let anybody convince you otherwise. Just be prepared for it to be one of the hardest jobs you could possibly do. I'll put in the description some books I can recommend for trading. And if you do try, start off with a small percentage of your portfolio that you would be okay with losing, just in case. What about altcoins? No real research on this topic, just anecdotal, unsurprisingly, but I'm not convinced that if there were studies done on it, that they'd be all that useful. The term, your mileage may vary, could not be more applicable than it is with altcoins. You could 10,000x your portfolio, or you may lose 95.5%. I guess you could lose 100%, but I would imagine that's rather difficult. So I can only give you my own personal experience, but it is one that my friends have reported having a similar situation to myself. So recently I did a small audit on myself, and I was actually bummed out by the results. I've made more money dabbling in alts than holding majors. By majors, I mean any one of the top 10 cryptos. No two ways about it, for sure, absolutely made more money because of alts. However, in retrospect, if I would have just held the majors and continued to accumulate them, the difference was not as significant as I thought it would have been before this audit. And I say that because from all the time I've spent researching alts, the significant additional risk I took on, and experiencing their wild volatility, learning new systems, the fact that the gap isn't a gigantic crater kind of makes me question my own intellect, not gonna lie.
Why didn't I do more research? I'm so stupid. How did my parent birth somebody this stupid?
So, alts, then? The strong performance of the majors definitely makes this harder to recommend. Even Doge at one point pumped from top 10 to top 5. There could be great gains from top majors that rivaled some of the best so-called low-cap gems. But general percentage of people who have made less money because of alts is probably not 95.5%. The amount of people who made better gains with alts than holding some majors might actually be a positive ratio right now, but I suspect it's nowhere near as good as many of us might have initially thought. That I'm actually quite confident in saying. So then, what is the best investment strategy? This sounds like the beginning of an Instagram ad. The best is what works for you, but the easiest to recommend even to experienced users is definitely dollar cost averaging. Do not underestimate its power because of its simplicity. It's not even a real debate. Research shows this strategy on average is going to give the most amount of people the most bang for their buck. So that covers the buying side. What about the selling side? In typical, brutal, honest fashion that also happens to be backed by a wealth of history. Never. The rich don't part with good assets. They get low interest rate loans against them at most, and they will even use those loans to buy more of said assets on occasion. That's a big part of how they stay wealthy. But if you want to sell, you want to try and time the market. Maybe you think it'll be as easy as following the most popular prediction models, selling the top, waiting for the dust to settle and buy back in. I don't think it will be that easy. But if you're confident, if you can time the market, you will definitely make more money on shorter time frames. Just remember, the extreme difference in timing between Tiffany and Brittany wasn't all that big a gap in the long run. Personally, what am I doing? A little of everything above, except day trading. I don't have the time or patience for that. Honestly, I would be horrendous. The best strategy, again, is whatever works for you and plays to your own strengths. Last 3 specific things I want to discuss, though, things that I find interesting: DAOs, DEXs, and wallets. So first, new token launches incubated by decentralized communities, or DAOs, are still by far the most profitable investment strategy for me right now. Although I don't often get an opportunity to invest much because allocations are highly contested, the returns are stellar. If you're interested and don't know where to start, the premier DAO in this whole space, in my opinion, is DAOmaker. As far as I know, they popularized this whole investment DAO thing. It's like a militant version of Wall Street Bets. I'm not paid to say that, by the way. This is not sponsored. Quite the opposite, I pay them. I've literally invested in probably just under half of everything they've ever incubated. Orion, OPT, these numbers sound fake. They're not. I invested in Orion. It may not be 280x today, but it's still massively up. But to add steroids to the mix, you combine a quality DAO incubation with anything NFT related, and the frenzy is just crazy. It really is. I saw a video recently from DAOmaker. The project they're incubating next is called Epic Prime. NFT platform working with AAA gaming companies and giant entertainment IP brands to create in-game NFT goods and marketplaces. I know this sounds like an ad. I'm self-aware. But I would feel it a disservice to make a video on how to make money and not talk about how I'm primarily making money. You know? So this could be big. Partnered with companies like Warner, Sony, Universal. Their team has people from Sony, Fox, Nintendo, Ethereum, and Facebook, and investors from SoftBank, Goldman Sachs, and JP Morgan. We love them, don't we? The premier NFT platform, maybe. Crazy. Just crazy. Watch out for this one. Follow DAOmaker on Twitter and keep up to date. Another small thing that can be a big deal if you're trading a lot on Uniswap. You probably shouldn't. It's great, but it's more efficient to use a DEX aggregator so you can get the most for your money. There's a few, but I like OpenOcean. It's plugged into all the major DEXs, including Uniswap and even Binance. So it looks for the best prices when you make a trade, and you can trade between other blockchains like BSC. Actually, personally, I've been doing quite a lot of. But the MetaMask integration, it works, but it's not that great. And that's why I'm looking at XDeFi Wallet as the next game-changing thing that is coming. That could replace MetaMask entirely as the go-to wallet for trading on DEXs. MetaMask just doesn't work with most chains. This does 6, including Ethereum, Bitcoin, which is nice, and Binance Smart Chain. The team is planning to integrate more layer 1s this year, such as Cosmos, Terra, Polkadot, Elrond, and Solana, plus hardware wallet integration. I can't wait to use this. Follow their Twitter to keep up to date. Last but not least, NFTs on Tezos. I literally just discovered this one. It's called Calamint, and it's in beta right now. I think this is gonna pop in popularity. First of its kind on Tezos, as far as I'm aware. Worthy of a follow for sure. And that's everything. Kind of a lot to cover today, kind of a longer-ish video, but it's been a while since the last one, so if you made it this far, thank you very much for watching. I appreciate it. Leave a like if you enjoyed, and I'll see you on the next one.